Donald Trump's sudden withdrawal of reciprocal tariffs on all countries except China was probably triggered not by the sell-off in stock markets but by sell-off in US bonds, according to some experts. Remember, from April 2nd, when the massive reciprocal tariffs were announced, the US equity index S&P 500 fell by 12% from 5,670 to a low of 4,835 on April 7th. Of course, the S&P index had fallen over 20% if one counts from the February highs. But the president was unmoved. However, the rise in the bond yields from 3.8% on April 4th to a high of 4.5% on April 8th forced the president to rethink. Why? First, some basic concepts. Bond yields rise when bond prices fall. That is when people don't want to buy bonds. That's what happened on Tuesday, April 8th, when the US government auctioned $58 billion of 3-year bonds. There weren't enough buyers, and US banks were obliged to buy up any supply not absorbed by other investors, mopped up 20.7% of the offering, the highest percentage since December 2023. This sent shockwaves. Why? Because no government spends only via taxes. It is constantly borrowing from the market via bonds. So US bond auctions are never short of buyers because governments all over the world buy US bonds. Here's how it works. India needs dollars not just to pay for imports from the US. We need dollars to buy even goods from China or Europe or Japan. So the Indian government always tries to run a trade surplus with the US so as to accumulate US dollars into what are called reserves. The reserves are made up of trade flows and capital flows brought in by investors into Indian shares and bonds. Now, remember, every Friday, RBI tells us what our forex reserves are. Today, we have 675 billion of FX reserves, most of which are held in dollars. Only a small portion is held in pounds and euros. The dollars are not kept as cash. They are invested in US government bonds. The top holder of US bonds in the world is Japan, with 1.08 trillion of US bonds or treasuries. China holds 670 billion of US treasuries or bonds. UK holds 740 billion. Then why did the US Treasury auction bomb on April 8th? Let me wind back. Actually, when the tariff announcement came, bond prices rose and yields fell from 4.2% on April 1st to 3.8% on April 7th. This was an expected reaction. When shares fall and people expect a growth slowdown everywhere, investors sell off shares and move to the safest asset, US government bonds. That's why US bond prices rose and yields fell from April 2nd to April 7th. Then why did bond prices start falling from April 7th and continue to fall on April 8th and 9th? Experts say there is a technical reason called the basis trade. They say large hedge funds own assets across stocks and commodities purely on leverage, on borrowed funds, with shares or assets as collateral. When markets plunged continuously from April 2nd to April 7th, these funds got margin calls to top up their collateral. And so they sold hugely in the bond market, which is one of the deepest markets in the world. The basis trade is a popular hedge fund arbitrage trading strategy between cash and futures positions on US bonds. They are highly leveraged positions. And if bond prices fall more than expected, for whatever reason, these basis positions have to be unwound, and they can exaggerate the fall hugely. There is another conspiracy theory, of course. Some experts suggest that countries like China abstained from buying US bonds to get back at the US. It is even possible that big buyers like Japan or UK or Europe and other retail funds sold bonds, worrying if the immediate impact of the high tariffs would be a crushing rise in prices and therefore higher inflation. When government bond yields rise, corporate bond yields rise even more, since they are always priced a few percentage points above the sovereign bond. So experts noted that this week the US corporate bond market also dried up. There were no buyers. Experts guess that a market veteran like Treasury Secretary Scott Bessent may have smelt the likely problems if bond prices crash suddenly. Remember, the SVB crisis was also due to a fall in bonds. If the bond you hold suddenly fetches much less because of a price crash, banks and insurance companies may suddenly be unable to make payments. They can face a liquidity shortage. Experts guess that Bessent and corporate leaders prevailed upon President Trump, who buckled when he saw the bond prices fall.
Bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy.
The power of the bond market has also become the talk of the town on Wall Street. Here's a tweet. Well, some have said the lack of interest in US bond auction may be spelling the fall of the exorbitant privilege the United States enjoys as the reserve currency of the world. It may be too early to pronounce this. Even today, India pays for Chinese goods with dollars, as do all countries around the world. The de-dollarization of world trade is a distance away.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Thank you for watching us on CNBC TV18. For all news and updates, subscribe to our YouTube channel and watch us on all social media platforms.